Good morning and good afternoon to everyone. I would like to extend my special thanks to Pareto for organizing this web conference, for inviting me and ShaMaran. I am Adel Chaouch. I am the President and CEO of ShaMaran Petroleum. It has been a very exciting 2020 for our company with a number of very positive developments that I would like to share with you. Let me take a brief moment to introduce ShaMaran Petroleum for those who are not familiar with our company. We were founded by the Lundin family and are part of the Lundin Group of companies. Our main listing is the Toronto TSXV Venture Stock Market, and we have a secondary listing in Sweden, in the Stockholm Nasdaq market. We are a company that has a focus on Kurdistan. Despite the challenges of 2020, we have entered this year with a reset of our strategy, a great focus on growth, financial discipline, and cash generation. I am pleased to share with you a number of very positive developments. We've entered into an agreement with Total to acquire the entirety of their position in Sarsang, a block next door to us. It is a highly accretive transaction that not only we acquired at a competitive price, but will also transform the company as it will double our production in the second part of 2022. It will also leverage a number of our financial metrics. For the current production, we are delivering on our guidance with production growth quarter on quarter. Our current production for the second quarter of this year has been averaging close to 40,000 barrels a day on a gross basis. And we produced these barrels at a lifting cost of $4.50 per barrel, which is 16% lower than the first quarter. Our second quarter financials are the best to date, with 340% increase in our revenues compared to the same quarter last year, and EBITDAX for the first part of the second year of this year that is 6 times higher than the same period of last year, thanks to sustained production, increase in oil prices, and our financial discipline. As I mentioned, ShaMaran has been focused on Kurdistan. We have been in the region since 2007 in a number of blocks, operated as well as non-operated. As such, we have gained a very deep understanding what it takes to ensure successful execution of large projects like the ones in Chaouch. We've got full experience inside of the workings of the Kurdistan region, been involved in the exploration early on, in larger source developments, as well as in current production. We've witnessed over the years a number of de-risking of key parameters, such as the validity of contract security, the payments, which I'll talk about later on, as well as the opening of the export route via Turkey and the port of Ceyhan. Chaouch has been the first asset actually to connect to this pipeline directly from the beginning without doing the trucking. In terms of our ownership, I will point you to the bottom left corner of our slide, showing our interest in Chaouch, along with TAQA, the operator, as well as the government. I also point out that it is the only asset in Kurdistan where the government is a paying interest holder. You can see the asset on the map on the left-hand side. We have roughly 110 million barrels of reserves, mostly medium oil in the Jurassic, and we also have a significant potential of resources that are mostly heavy oil, around 250,000 barrels that we look forward to exploring and developing. So far, we are positioned with Chaouch as the third largest producer in the Kurdistan region, operated by IOCs. We are also in the process of adding the interest in Sarsang, as I mentioned. This field is operated by HKN, a private US oil and gas company that is also presenting at this conference, I think a little bit at the same time as us, and they've been in Kurdistan operating since 2007. I would like to share with you further details on the Sarsang transaction. Early this year, we had a vision that the oil prices would rally up, and we acted on it. We approached Total Energies in the first quarter of 2021, and we negotiated the acquisition of their subsidiary called TEPCRI that holds the interest in Sarsang. This is an 18% working interest, which equates to 22.5% paying interest, as the government in this case is carried in this field. This transaction is highly accretive at an acquisition price of $155 million. As you can see the chart on the right-hand side of the slide, the seller has agreed to deferred payments of $20 million through a promissory note that will pay at the latest 12 months after the closing of this transaction. The remaining $135 million will be paid via cash from the new debt raise, the rights offering, and other adjustments. There is a contingent payment of $15 million that is linked to production and milestones of 130 million barrels, assuming that the price of oil will remain over $60 in the preceding year. This transaction was enabled through a new 4-year maturity bond that will replace our current bond and will fund a portion of this transaction, as well as with the support of the Lundin family that has agreed to underwrite the rights offering in the form of equity. In terms of timeline, transaction is effective January 1st of this year, with a closing time projected at the end of this year, assuming that we have KRG approvals, regulatory approvals, and the rights offering all closing by then. This transaction is truly transformational in many ways for ShaMaran, as it allows us for the diversification of our asset base. We go from one world-class production field to 3. It also diversifies the crude quality, as Sarsang adds to our portfolio a higher API crude with a very low discount or an applied price. Right now, the discount for Sarsang is around $7 to Brent. Sarsang also adds immediately 50% more of our net production. It will double it in the second part of next year as this expansion of the project comes into line. Right now, Sarsang is in the process of adding a second facility that will add 25,000 barrels per day in terms of processing capacity. The combined assets will allow us to generate enough cash to significantly reduce our debt in the next 2 to 3 years, but also position the company on a path towards paying dividends and enhancement to the bond covenants that we added into our new bond offerings. Let me now update you on our activities in Atrush. Before I get into the details of our production and operation at Atrush, let me share with you how we've been adjusting to the context of the pandemic. Our focus was and remains the safety and well-being of the staff and team members in the field and our offices. We enhanced a number of initiatives that we started last year during the onset of the pandemic in an effort to be proactive about this matter. Our COVID protocols have been implemented in virtually all aspects of our business, and as such, our operation and activities have largely been not impacted by COVID. We have announced our production guidance at the beginning of this year to be between 39,000 barrels per day up to 44,000 barrels. As such, you can see on this chart the progression of Atrush production over the quarters as it relates to our guidance. The return to quarter-on-quarter growth is largely attributed to the resumption of the capital program that we suspended last year due to the pandemic and the collapse of oil prices. Allow me to take you back in time here on the slide and show the progression of production of Atrush since the inception of the activities in 2017. The first step was the development of a central processing facility that had a capacity of 30,000 barrels. Over the past few years, we accelerated production capacity in late 2019 and early 2020 by debottlenecking the main facility to allow it to produce up to 40,000 barrels and adding a temporary facility in the form of an EPF that took us above the 55,000 barrel per day capacity mark. This year, with the resumption of the capital program, we added a new development well called CK-17 that we completed in June, bringing the total number of wells that are producing on site to 11 wells. Atrush happens also to be the first asset that had a fully dedicated well for injection in addition to these 11 wells. This year, there is a focus on maturing the concept of the integrated oil column. The medium oil and heavy oil are greater in the same Jurassic formation. The concept of this column here is to utilize the existing facilities and wells to extract both types of crude rather than have dedicated facilities to the heavy oil, thus reducing development cost. As you may know, we have been reporting that the portion of the oil produced last year has had heavy oil. Next year, the intent is to progress this concept of development and sustain production at the levels of pre-COVID. We are also concurrently progressing a gas solution. We have provided our corporate guidance early this year. I'm very pleased to report that we are largely on track across all metrics. I shared with you our production growth in Atrush. We expect to remain between our range of 39,000 to 40,000 barrels a day. The positive development also was a reduction in lifting costs, which has been captured at 16% compared to plan. The operation expenditures for Atrush remain flat as per guidance, and also equally important, our corporate budget has been reduced by 30%. We remain on track at this point. As it relates to the KRG payments, I know it's an important subject for a number of our investors here. We do note that the government has been paying on a routine basis. There has been a couple of shifts that are important to notice. One of them is the proposed mechanism for payments of the arrears has been adjusted. This mechanism has been reported by a number of other companies. Right now, the mechanism is the payment of anything above $50 at a 20% distribution, as well as a change in the invoice payments that went from 30 days to 60 working business days. You can see on the bottom chart the evolution of our invoices versus the receipts. And you can see the progression around the period where there has been a suspension of payments, which was from November 2019 to the early part, February of 2020. We have been very busy on the bonds front. Early this year, we have negotiated with the bondholders the ability for us to buy bonds at market rates. As such, we've been buying bonds at attractive rates. And as of now, we have reduced the $15 million amortization requirement by 2/3 to the $5 million level. Additionally, we were successful in placing a new $300 million bond for the company. This new bond has a reduced maturity of 4 years compared to the current one of 5 years, with the same interest rate of 12%. The current bonds will convert into the terms of the new bonds at the closing of the Sarsang transaction. In this process, we have closed an additional $111 million, and the process was largely oversubscribed with participation of our current bondholders as well as new investors. The proceeds of the new bonds will be used to cover a portion of the transaction as well as certain corporate costs. The new bonds will allow us to pay dividends once the debt is reduced to a given level. Last but not least, let me share with you our approach on ESG. Our management team and our board are fully committed to all the elements of ESG. Let me give you some of the example of activities in each one of these areas. On the environmental side, we're very pleased to report that the partnership has been focusing on implementing a gas solution for the project of Chaouch to eliminate flaring as well as reduce emissions. And this will be done 2 ways: by sweetening the gas, using it to displace diesel that is currently right now powering the turbines, as well as incinerating the flare. We also have an additional initiative that is introducing a renewable technology in the form of solar panels that you can see them on the right-hand side. These panels are used to power ancillary facilities around the site. I also would like to mention that Chaouch is one of the first facilities in Kurdistan that has implemented a water management program via a water reinjection well fully dedicated to that since 2019. On the social front, we have reached a level of localization for the staff that is well in excess of 75%. And this year, we've been focusing heavily on local services and suppliers for the benefit of our operations and activities, as well as a number of programs for the communities, mostly in the form of education and agriculture initiatives. Lastly, on the governance front, by virtue of the fact that ShaMaran is listed in Canada as well as in Sweden, it gives us a great coverage in terms of public policies and procedures that we feel comfortable here are giving us the right structure for our governance. In closing, I would like to share with you some of the planned activities for the next few months. Clearly, we'll focus on closing this very value accretive transaction with Total to acquire the interest in Sarsang, and hopefully it will be done by the end of this year. Concurrently, we'll continue to focus on optimizing operations and production. With our resumption of capital programs, we hope to continue to grow quarter-on-quarter our production. And on the financial side, we will maintain our financial discipline. We'll continue to commit to using free cash to buy bonds if we can get them at attractive rates. And lastly, we will continue to look at opportunities of growth as may arise. With that, I want to thank you and wish the audience a good continuation in this conference.